Coming to you live from the palatial studios of PBJ Productions. Welcome to Patrick and BJ Talk Real Estate, where we talk about life, the universe, and everything as it relates to real estate. Hey everybody, it's BJ.
And Patrick.
And we're back with David from Olympic Mortgages. Thank you for joining us, David.
Welcome back.
Thanks for having me.
And do you know how you know it's winter in Canada? It's so cold, even the Bank of Canada is freezing.
I thought it was when I watch the news and I see everywhere else is snowing, but not here in Victoria. Sorry, everybody.
Yeah.
But that's it. That's the news right now. Is Bank of Canada has frozen the interest rate, the overnight rate. Is that right?
Yep.
And David's going to help us out with a little bit of an explanation of what's going on with that. And how, I guess it's like the economy, bond markets. I don't know, you're smarter than I am when it comes to all of that. So we want to hear that. And we want to hear what are your predictions for 2024 for interest rates.
Okay.
Is it going to be doom and gloom? Are we going to be seeing 10% interest rates?
No.
Kick it off, right?
Yeah.
It's a straight up no. Okay, we're not looking at that.
Do you know, my first car loan I was in Alberta, in Edmonton, and this was in the 80s. Talk about interest rates.
Yeah.
And I remember thinking I got such a smoking deal on my first car loan because it was right around 15%.
Oh, wow.
Wow. Yeah.
Right? So it was like 14, 15, somewhere in that mid-range. I remember a buddy of mine, his dad owned a bunch of rental properties, and the mortgage rate on those properties was 18.9%. Because this is what I know is he just walked into the bank and dropped off the keys and walked out.
Oh, yikes.
Wow.
For however many rental properties.
Well, that might come around again if like unemployment hits and everybody with the big trucks and the brand new Mercedes or whatever. And so we'll just wait around and see how that goes. Maybe I'm getting ahead of myself. I don't know if that's going to affect the market that much, but.
Well, first things first, I do have to say that, I shouldn't have to say this disclaimer, but obviously any of my, predictions, I have to put the disclaimer that obviously we don't know what's going to happen. These are just predictions.
Sure.
So because I've had people and I've had some folks in the past that say, oh, but you can't say that. You can't say this because you don't have a crystal ball. I'm not saying I have a crystal ball. I'm just saying that what I think is going to happen, what most people think are going to happen. So take it for what it is.
That's the disclaimer.
Yeah.
Everything on this channel is opinion. We always
here
the fundamentals.
It's just an opinion. It's
right?
just an opinion.
Feel free to exercise your own discretion and common sense and figure out what makes sense.
Right, and our viewers, subscribers, if you have an opinion, you think, what's going to happen next year? Is it going to be 10%? Well, David says no.
Yeah.
Anything can still happen.
Yeah, you can't write me a letter saying, well, you said rates weren't going to go to 10%. Now you're going to owe me the difference or something like that. No, I don't think rates are going to go to 10%, and that is just a prediction.
Yeah.
But, so like you started off with, our economy is showing signs of slowing.
Yeah.
There are many industries now that are moving extremely slowly and suffering due to the lack of credit and due to high credit costs and lower demand. So our GDP has dropped. Our GDP, gross domestic product, has dropped. That's a big indication that our economy is slowing down. Inflation is back down to a reasonable level of around 3% from its high of about 8%. So this interest rate hike time has had a huge effect on the markets. And so what happens generally? You're asking about you were referring to the bond market. Mm-hmm. So the bond markets is basically like savings accounts. And what happens is that when the economy shows signs of slowing, and let's say more businesses are failing, businesses are losing value, people may or may not be going bankrupt, it opens up opportunities for investors who have their savings in bonds to take that money out of the bonds and reinvest it back into the into the stock market, let's say, where they're taking the money from savings and investing it back into the stock market. So
Assuming that they're being optimistic that it will recover.
Well,
and now's the timing to get like a
right,
discount
exactly.
on-
It's
discount
like
on
these
that.
investors basically sniff out a deal and say, okay, this business specifically is a deal, and that's when I'm gonna take my money out of savings and put it into the business. As soon as the money starts flowing out of the bond market, those bonds become less attractive. The savings rates go down, as do because the bonds are becoming less valuable. Bond rates are falling, and therefore the mortgage rates are going to start falling. So we've already been seeing it quite a bit. This last month, we've had mortgage rates fall by anywhere from 0.5 to 0.8%, depending on what you're looking at. Fixed rates, not variable rates. Variable rates have actually, depending on what type of transaction, because this is, your rate is hugely dependent on the type of transaction, but variable rates have sort of held steady and maybe even gone up a little bit, whereas fixed rates have dropped dramatically.
So describing like investors moving their money out of bonds, savings into other investments.
Yeah.
This just sounds like it's describing like a cyclical behavior.
Exactly. That's exactly what it is. It's a completely cyclical behavior. So
Is it predictable if it's cyclical?
I'd say it's predictable, but not necessarily the timing of it.
Okay.
So when I talk to clients, I say literally, it's a matter of time that rates will drop. So
we just don't know.
We just don't know how much it is. In my estimation right now, it's going to be 6 months to a year before we see the Bank of Canada really drop their rate significantly.
Okay.
Unless if there's economic news that comes out in just December, January, February showing a significant slowdown in the economy, then we might even see a rate drop from the Bank of Canada in March or April.
Possibly sooner. Okay.
So a question about, this is a little bit more political,
Yeah.
but if there is an election,
That's a good point.
where does that put, like, I understand the Bank of Canada in theory is supposed to be independent, right? Where does that put what could potentially happen with interest rates in the upcoming year?
This is more, that's a great question. What I think I've seen in the past, in a general sort of, in a general way, is that when elections happen, rates do generally stay low or drop.
Right.
That's what we've seen in the past. But
Even though they're supposed to be
specifically,
independent, right?
well, not Bank of Canada. Sorry, not the variable rate specifically, but fixed rates.
Okay.
Because fixed rates are more reactive to market sentiment.
Okay.
Whereas the Bank of Canada makes their moves independently of what's happening in
Right.
politics.
Right.
That's interesting.
So we're more talking about fixed rates
Okay.
when you're
Yeah.
talking about politics.
Yes. Yeah. Okay.
But with regards to this in general, if we see a liberal or NDP government come back and stay in power federally, then that might signal a little bit less of an advantage for businesses, and it might cause the rates to sort of like, it's too hard to predict, I think, because really right now, from a corporate perspective, there's no difference between a liberal and a conservative government. The liberals and they're both governments, both types of government up until now have always favored corporations and business within Canada. So
There's probably some economic and political stability in there, just to, if it's from an investor point of view, just knowing that it's not going to change. For
Right.
better or worse, they know what they're dealing with coming in.
Right.
So having that stability, I think, is a positive note. Never mind which way people swing on their politics, but
So coming back then to going ahead to 2024, your thought at this stage anyway, from what we're seeing and what we're hearing, is that probably in the next third quarter?
Well-
of next year, you think? Third or fourth quarter? If we're going to see
The last half.
yeah, we're probably expecting some kind of maybe reduction in that time in interest rates?
So for the variable rate, Bank of Canada, in my estimation, will probably start dropping in March or April.
Okay.
It never fails that during a cycle like this, economists will always put their predictions further out. And then as news keeps rolling in, those economists keep rolling back their predictions and
Yeah.
saying it's going to happen sooner.
Right. So they're rock stars now because they told you it was going to be here and it's quicker
It's
than.
kind of like managing expectations
Yeah,
and
yeah.
trying not to be wrong.
Right. Yeah.
But I just think these guys pontificate too much, and what it comes down to is, even though their numbers might be telling them that it's only going to be third or fourth quarter in 2024,
Yeah.
it's going to happen sooner.
Right. So just as a side note, they predict a little bit further out than what it might happen.
Generally,
Okay.
that's what I find. Fixed rates, I mean, as I said, fixed rates have already been dropping quite a bit just because the Bank of Canada held steady and just because we have economic news that shows signs of slowing in our economy. So if you want more predictions on fixed rates, well, I do think that anybody getting a mortgage right now should just take variable. Don't lock into 5.5 or 6% if you can avoid it, because I think that in 6 months to a year, fixed rates could be anywhere from 3.5 to 4.5%.
Oh, wow. Wow.
Okay.
Well,
So it's not all right. So if the economy is slowing and it continues to show these signs, plus if we have if the election comes, I'm just assuming it does. Like those, it's not all great news, but it's not bad news either.
no, I think the news is
But
going
we
to...
have to hold on to like have a better circumstances.
I think just keep holding on. At this point in time, I feel like it's more of a risk for my clients to lock in at 6%
Right.
for 3 years.
Sure.
Because in another year's time,
So-
if they can lock in at 4%, they're gonna thank themselves for waiting.
Right. So any new buyers coming in looking for a new mortgage, like get onto the variable rate, hold on a bit.
Yeah,
Yeah.
yeah. Because
Get the right house that you're looking for now instead of waiting to see what happens in 6 months or right. Because if
Exactly.
interest rates go down, if there's enough pressure, we have a huge immigration goals for Canada, and what Victoria's Vancouver and Toronto are sort of the major ports of call for entry, and Victoria's sort of like that secondary spill off,
Yeah.
where the Vancouver has such demand on property values and just
Right.
demand,
Yeah.
that people will sell from there and move out to places like this or Lower Mainland or elsewhere, Kelowna. So yeah, I would say like don't wait. If it's the right property,
I
out
completely
there,
agree.
Stick on the variable. Gotcha.
I completely agree with you that right now, I mean, we don't experience buyers markets for very long here in Victoria.
Yeah.
The buyers markets
That's a good
generally they don't last very long because we just have way too much pent up demand.
Yeah.
And it's nice here.
Well, yeah,
Like we mentioned, how do I know when
beautiful?
it's freezing,
It's beautiful
right?
here,
Yeah.
so
Yeah.
everybody wants to come here.
Yeah.
So, and then there's even more pent up demand now because there's all these people that are sitting on the sidelines waiting for interest rates to come down.
Yeah.
So as soon as interest rates start to come down, all of these people are going to restart their buying process, and are specifically here in Victoria, it's going to go very quickly from a buyer's market to a seller's market.
Yeah, and we talked about this before. Historically, what Victoria's market has been is when there's been a downturn in the market. So whether that, and typically that references it's become a buyer's market. So
Right.
there's more inventory, there's more time, et cetera,
Right.
et cetera.
Right.
When there's been a downturn in the market, within 12 to 18 months of that downturn, there's been a rebound of the market past where it was before the downturn.
Easily.
Right? So
Yeah.
we're kind of starting to tee up and get ready for the other side of that at some point, like you said, in the next year or let's say 18 months. But,
Yeah.
I'm curious about how does the interest rate affect new construction mortgages or construction loan? How is obviously it's more expensive. I was looking at some numbers and I thought like, oh, that's not too bad, even with these interest rates. So can you speak on that a little bit?
I could,
Or is that a whole
is that
other
another-
it's
episode?
kind of a different. It's a different episode.
So we
Different
probably have to
animal.
do-
It's a
We'll
different
save-
episode.
We'll save that for another time because there's so much pressure from the federal government, provincial government on affordable housing.
Right.
I know I could feel an election coming, right?
Yeah.
I think
So-
I think one of the main things that we just have to sort of have some common sense when we're looking at interest rates and what they've done. And I'm talking about this 3.5% to 4.5% range because it falls right in between where the low was. So at our low in 2021 or whatever it was, we were doing more fixed rate mortgages from anywhere from 1.5 to 2%. And at their height, we were doing fixed rate mortgages from 6 to 6.5%, maybe up to 7%. So it's definitely unreasonable for the fixed rates to again drop to 2%. That
So
will
free money again. Yeah.
that will probably not happen. It just won't happen.
Yeah,
I don't think. But it's definitely not unreasonable for this to drop back down to around that 3.5 to 4.5% mark.
Right.
It's a cycle. And that's where I think it's going to start to bottom
I
out.
think that's the best takeaway right there.
Yeah.
So if you have any predictions of what's going on, put it in the comments below. Even message us if you
Yeah,
want.
for sure.
And we'd love to hear that.
Love to hear what you think.
Maybe there's a piece of information like this is kind of like a surface conversation. What's happening? But if you have more data, I'd love to read more about it. I'll share it with David, and we'll carry on from there. Of course, David's information is going to be in the description below.
Yeah, and for those that haven't, please take a minute and subscribe to the channel. We're putting out regular content 2, 3, maybe more times a week, depending on what's going on. You want to make sure that you don't miss anything. So subscribe and we'll make sure that you get all the notifications and reminders. Like this video too. It helps us with getting the word out. And if you know people who you think would benefit from what we've talked about, certainly reach out to them, send them the link to the video. And David, thank you for being with us today.
Thanks for
Great
having me.
information.
Yeah,
it's
good.
been great.
Good.
And so again, make sure that you subscribe.
That's it. We'll
And-
catch you in the next video, and we're sort of in the middle of the holidays, so Merry Christmas
Merry
to everyone.
Christmas.
Be safe.
Yeah,
See ya.
Merry Christmas.